Hi, it's Lee, and welcome to the Tesla Economist. Forget about Tesla's stock price bouncing back to all-time highs soon. We were in a boom before, and the EV industry was even in a bubble. We won't see another boom for likely another 10 years, except next time it won't be fueled by an EV or crypto bubble. It will be something like AI, robotics, or DNA sequencing. Bubbles and booms come and go, but it's not to say we won't ever see those stock prices again, or at least not to say for Tesla. I can't say the same about the likes of Rivian. It just takes some breakthrough for a revolutionary new industry or product, and then suddenly everyone thinks they can do it. Yet there's still no search engine like Google, no e-commerce store like Amazon, no crypto like Bitcoin, and certainly no electric car company like Tesla. The real deals have to ride through the tide with the Fugazis. But it's the next level of belief where you make the big money. Amazon's stock price is up 200 times since it bottoming out after the dot-bomb crash. Right now, investors want value, not dreams. What can they take to the bank? Anyone who says the likes of Rivian or Polestar will make it for sure is just advertising the fact that they do not know how to read a financial statement. I'm not saying they will fail for sure, but there are no signs of them getting close to making it yet in those financials. So to say otherwise is misleading people either to as the success of these companies or their skills at analysing businesses. I've heard some authoritative people literally say statements like these. The same people also jumped all over Arcimoto, a company currently trading at 1% the value of its high. It dropped 100 times. In the past, I've said Arcimoto's product was far too expensive and needed to be profitable with a price point about 1/3 where it was. But we were in a bubble. Yet there were all sorts of prophets around who actually got in early to Tesla and were up 10 or 20 times, or even more. Despite how delusional they may have been prior to their success, Tesla's stock price jump even beat their own expectations by a long shot. Except a lot of these investors prophesying Tesla's future success was all based on FSD and robotaxis. Yet we're still waiting to this day. But if you make 10 to 20 times your money in just a short few years and start talking about it, then people's ears prick up. And if they've been talking about this happening whilst the stock has been jumping somewhat too, then they really catch an audience. And retention is exceptional if said audience has invested into their rhetoric and profiting as a result. It felt like there were prophets telling us how the future will go, and this company, Tesla, and its stock price won't just go to the moon, but all the way to Mars. It'll be the biggest company ever. And if you recall, a lot of people used to say Apple was going to hit 5 trillion market cap too. However, it's a different story when the music stops. It becomes harder to believe the hyperballs telling us Tesla's stock price will hit $1,000 next year. Last year, people would have believed you. Say it now, and you lose all credibility. But now, the momentum of the stock price has not only stopped, it's quite a bit below half of what it once was. It's trying to find its true value in the market, when we're not in a bubble. Investors are pricing it closer to the intrinsic value they determine. Charlie Munger even recently said some positive words about the company too, and now people are speculating that it's such good value. Maybe Warren Buffett or Berkshire Hathaway are going to buy into it. They already own a decent chunk of BYD, so they know the industry. Well, they invested into BYD from the cash flow of the cell phone handset side of the business and got lucky with the fact the company bubbled in the EV industry, who still can't make profits with BEVs. Personally, I think it unlikely they will invest into Tesla. So what is Tesla's actual value in a recession? Should you invest in Tesla, or perhaps double down your investment? Or should you get out now whilst you still have something left? Well, just like when Tesla's stock price was approaching the moon, it's exactly the same. No one can predict the future, not even Warren Buffett or Charlie Munger, or Jerome Powell for that matter. Sure, what the central banks are doing now seems to have some effect on inflation, but it's all totally axiomatic. There are simply too many variables at play, and none of them really know the consequences of their actions, or what the true future will bring. Just like when I doubled my money on my Tesla investment, I didn't know if it would double again, or would crash back down. And when it did double again, I still didn't know. But then it did double again and again. At which time it doubled are you supposed to know to take your money out? Take it out too early, and you may miss doubling your money again. And the same holds true for when the stock's crashing. If it drops 10%, will it drop another 10%, etc.? What we do know is that EVs look pretty likely they will be the future of automotive. Even the governments are behind the movement. Tesla can create the lowest cost form of vehicle for both transport and cost of ownership, Presumably, other EV manufacturers may eventually be able to beat internal combustion costs like for like, and potentially be a part of the industry, likely profitable if all the ICE manufacturers fall. But that would mean their prices have to be high, or the governments have to help. I think a lot of the government's movement to EVs, though, is to take their nations off the dependency of oil, not just about climate change. So it's likely that some auto manufacturers may be around to also make EVs other than Tesla. But how can the lowest cost provider of transport go under, especially in a recession? On top of that, said lowest cost manufacturer has done an outstanding job in adding value with software to their vehicles. The extras and upgrades are all software, so the cost of the vehicle remains the same, but the value added keeps increasing, and thus people are actually willing to pay more and more for a Tesla. But it's also the safest car in the world, best handling, best performance, most fun, and everything else you already know. But lowest cost. This company will barely break a sweat during a session due to these massive margin buffers. If Tesla have to lower their prices at all, it just means they take more market share from the competition as the automotive market contracts. But when it expands again, Tesla wouldn't have stopped producing and increasing their production exponentially. So that when we are back to a regular market, the competition's market share has gone for good. Except these are the same models Tesla keep making year after year, with several manufacturing alterations every week. They refine manufacturing further and further, reducing costs, cutting processes, removing parts, increasing efficiencies, reducing weight, and make the occasional major breakthrough, like new battery packs, or totally new platforms, whilst vertically integrating all the way down to the raw element in the ground, reducing costs continually, yet of course still adding value and improving the software, and the biggest added value feature, FSD. And this is before Tesla have even launched their actual low-cost version of an EV affordable for the masses. Tesla will be massively profitable through a recession, giving them opportunities to buy out distressed assets to vertically or horizontally integrate further, lock in long-term contracts at great prices with suppliers who need the business in these uncertain times. We don't know how far the economy may go to contracting PE ratios, or if it's going to start recovering, but Tesla will keep becoming profitable. And if we do even 2.3 million vehicles next year, that alone will drastically reduce OPEX per vehicle from about $7,000 a vehicle to more like $4,500. That alone is $2,500 more profit per vehicle, with about another $3,500 where that came from still. Then the simple numbers of ramping up Berlin and Texas, going from negative margins in Q2 and very low in Q3 to 25 to 30% in early 2023. It's easy to say Elon is a genius, he lands rockets, and as a result, everything is going to turn out well for Tesla, because everything Elon touches turns to gold. And if that has been your investment strategy for the last few years, then I can't knock it, as you've done very well. But I'm someone who likes to study the fundamentals, and that's what I offer. So I could say Elon is being an absolute genius with Twitter, and he's going to vertically integrate Tesla's advertising through Twitter, and Tesla will go to the moon. Or I could give breakdowns of how much Tesla's operating profits are going to be when they hit various run rates that are believable, and work out how long it might take until we see the stock price start to recover based on how the economy feels. In my opinion, it will take solid numbers to move the stock, which may take a few quarters, but I still don't think enough to be back to all-time highs, more like mid-$200 to $300, which, don't get me wrong, is still an outstanding recovery in this economy. To me, this business still looks great, but if the economy and stock price is getting you down, then go through the numbers and make a rational, objective decision rather than letting the bipolar disorder manic depressant Mr. Market make you decide how to feel. If history teaches us anything, the compression will not last forever. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.